Hello everybody, welcome into the NinjaTrader Ecosystem webinar room. Before we get started with today's session, I would like to take a moment to test for picture and sound. So if you can see the iCinDER screen showing, and if you can hear my voice, please type the letter Y into the room, and this will confirm that audio and video are working. Getting a lot of confirmations, thank you all for confirming that, and thank you for joining us in the webinar room today. My name is Ryan Lai, and I work for the NinjaTrader Business Development Team. And we have a very special event today with Raul Jimenez of iCinDER Trader. Before we move any further, I did want to put an instant poll into the room to see how everybody is using the NinjaTrader ecosystem website. So you can go ahead and click on the appropriate type of use you have here, whether you're using it for indicators and strategies, educational services, programming services, or if you haven't used it yet. And while you fill out that poll, it'll give me a chance to read over a quick disclosure here. It's important for everybody in the room to understand that there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether this trading is going to be suitable for you, and this will depend on specific circumstances and financial resources. It is possible to lose all of the funds that you deposit with your broker, and you can even incur losses beyond these amounts. I'm posting a link into the room to the risk disclosure, so you can inquire there for more information, and that's the full copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation or a recommendation, but simply educational in nature. And this presentation is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. If you have NinjaTrader brokerage related questions, they should be directed to the NinjaTrader brokerage directly. And you can call the number 312-262-1289 and speak with them, or you can email brokeragesales@ninjatrader.com. All right, looks like most of you had a chance to fill out the poll, and it looks like quite a few of you are actually using the website for indicators and strategies mostly. And then in the second lead, we have people looking for educational services, and a few of you in the room who have not yet checked out the ecosystem website. So we do have new tools that are added nearly every day to the NinjaTrader ecosystem website, and it is home to hundreds of apps and services. You can quickly and easily find the tools and services you'd be looking for with a simple keyword search. And you'll find the information about upcoming webinars, and you can also view all of our previous webinars on demand at our video archive. And there's a link to the ecosystem. Also, if you're active on social media, please ensure to like or follow NinjaTrader as the best way to get updates on all things for the NinjaTrader ecosystem. I'm posting those links into the room now. And just to remind you that NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. And to ensure that you're on the latest version of NinjaTrader and to pick up a free data trial, you can go to this following link. Or if you're looking to purchase or lease a live license key for NinjaTrader and trade a live funded account, you can take a look at our purchase options at this link. And lastly, if you're just getting started with NinjaTrader, we offer free live training webinars on a daily basis, and you can view the schedule at the following link. All right, so with that being said, we are very excited for this unique event with Raul Jimenez as he discusses the challenges facing visual traders, such as finding cycles, measuring velocity, and evaluating internal market forces. The iCinDER Cycles MF can help traders find tradable setups while helping to minimize risk. So join iCinDER founder Raul Jimenez for a demonstration of today's markets using the iCinDER analysis toolset to locate trading opportunities. So thanks everybody again for your attendance today, and without further ado, it is my pleasure to welcome into the NinjaTrader webinar room, Raul Jimenez. Go ahead and take it away, Raul.
Thank you, Ryan, and thank you all you folks for joining us today. We're going to talk about basically the cycles, velocity, and market force, which are tools that I created for my own trading. So let's go ahead and jump right into this presentation. And before we start on the agenda, let's actually go over the disclaimer. iCinDER tools are indicators that should not be used solely or as a replacement to your current tool set. All projections are hypothetical, and they're only used for educational purposes. This family of tools and those that have been created by RJ5 Group and iCinDER are for the sole use of analysis and to further allow you to have confirming indicators. Neither the author nor RJ5 Group LLC provide any assurance as to the returns, risk management, or losses you could incur while trading financial instruments. All investments are at your own risk. So a little bit about me. I know some of you already have know a bit about me, but I originally started as an accountant, business administration, and then I got an advanced degree in computer information systems. From the very beginning in the 1980s, the goal, or at least my goal, was to actually implement technology, in essence the computers, into the accounting space. And for a number of years, I basically did that as a consultant. By 1990, I started trading. And basically, I had some of the same challenges that all of you have had. Well, what indicator do I use? How do I keep from losing all my money? Who's going to provide me the correct education so that I can actually learn how to trade? And so during those early years, as you all did, I tried different indicators. I listened to different people. I learned from others, and from some of those I found that the information maybe was not as useful as I thought it could be. So I did go to work for a software company, and during the time that I worked with them, I spent quite a bit of time basically doing data visualization. I had originally the tools that we have today as iCinDER were items that I used, but I used to calculate them by hand. In 2006, when I retired from this company, I went and I said, okay, why don't I just go ahead and write the indicators? Originally, there was only one single algorithm, and the algorithm, I named it, and I trademarked as iCinDER, Cycle Indicator Exponential Resolver. So that became the beginning of the tool set that I created for us traders, in essence. But today, and this is part of our agenda, we actually have new tools. They have been updated. They have actually been broken down into 3 different levels, because one of the things that we generally need to do, we need to know cycles. In other words, are we trending in a bullish bias or a bearish bias? Number 2, we want to see the acceleration of the momentum, which is velocity. So we have a velocity suite pack. And along with that, after I worked with a private equity firm for a while, I was basically involved in looking at the internal market forces. In other words, point of control, delta, profiles, and so on. Out of that came what today is the cycles MF. And cycles MF is market forces. So if we go and break down the family of cycles, we have cycles, which they're called cycles CF, cycle force. Then we have cycles velocity force, which is the acceleration of the cycle momentum movement, and cycles MF, which apply the original algorithms from 2006 to internal market forces. You could say point of control, profiles, and so on. So with that, we actually ended up with a nice suite of indicators. However, you could have said, sometimes you can have just too many of them. But through the days that we have, and part of the purchase is having 5 one-hour sessions where we go through all the indicators. So let's again touch on the challenges. Number 1, we search for tools. As we search for tools, it is imperative that we understand what the indicators measure and what the output is, because that is what allows us to actually efficiently use the indicators. And then as a challenge we also have, we are considered retail traders. We don't get to see everything that's going on behind the scenes. We don't get to see levels. There's a lot of information that's missing to us. So we're always trading against the algos, against the machines. So what's the best we can do? The best we can do is try to ascertain the movement of the market, jump in and get out in time so we don't get affected by a reversal. With the markets and cycles, there's something that is basically, I believe we all know, and that is Dow theory, where Dow theory talks about major cycles, intermediate cycles, and minor cycles. Each cycle is smaller in nature. The challenge is also is ascertaining momentum. So with that, we have a number of indicators. And momentum is like when you have an automobile and it's sitting in your front yard and it's at zero. No, it's just at a standstill. And then it accelerates. And when it accelerates, it goes from, let's say, 0 to 60 in 6.2 seconds. That's a push, a momentum change. Now, the rate at which it continues is velocity. In other words, you keep on with the same amount of pressure on the accelerator. And as more energy is being added, the momentum original that you started with, it continues to drive with the acceleration in essence, price movement. There are times then when finally velocity wanes because of the momentum that the instrument has. It continues moving, let's say, upward in a bullish bias or in a bearish bias. And we're going to look at all those things as we go along. And the third part of the trader challenge is understanding what is taking place. Because you can look, I mean, over here we have a market profile. We have a MACD. We're looking at time and sales, the transactions that are taking place in the market. We're looking at level 2. At what level do we have a certain amount of offers, bid, and asks? You know, what will someone sell us a specific instrument, you know, a contract for the NASDAQ or for the ES or for the YM? And that fight is taking place all along. So that is the internal market force that we want to look at. So let's recap. We want to measure market direction, bias. By measuring bias and by looking at internal market forces, we're trying to ascertain trader sentiment. Then there's the blending of cycles. And what I mean by blending of cycles is when we create an analysis, we do not rely solely on, let's say, cycle force. We look at that and we say, okay, let's look internally what's happening in the market. And then we ascertain market force. By combining two different types of measures from different perspectives, we are attempting to gain or to provide an edge. And an edge is that which allows us on our analysis to make a better, deeper analysis that will have a higher probability of success. So as we look at the indicators, and this is actually just a quick look at the number of them. On their cycles, you have the three original, the intermediate, minor, and major. And you have a number of other tools like Ranger, and which tell you what is a bar worth. We have the velocity indicators, which is enhancements to the original cycles, a different take, a different change in the algorithm. And then market forces is just applying the velocity and cycles algos to the internal market forces. What it allows us to have, and this is where it has evolved to, is now we have, if you looked at the last one, it's called iCinDER Trend Guide XP9. XP9 is able to look at multiple time frames on a single chart. And this is something that we were able to implement because of NinjaTrader 8. It was a bit harder to accomplish under 7. It could be done, but this actually made it faster and more efficient. So it's time to jump into a demo, right? Because what we all want in essence is to see what is it that we want to. Okay, I think we have that done. Okay. The indicators that we can get. So let me maximize this. Okay, there we go. So remember I talked about cycles? So here's a cycle. And you see the big movement from, let's say, 1109 to February 16th, 1103. And what did that tell us? Well, in essence, that was the major cycle. That whole thing right there. So from this level, right here to right here, it's major cycle. Now the major cycle had two smaller cycles in it. The intermediate cycles, and there's 1, 2 in yellow. And then that was followed by a minor cycle, which are cycles within the intermediate cycle. So in essence, we let's say make an assessment of this. What does a major cycle have? A major cycle, in essence, holds an intermediate, a minor, and it may contain sub, minor, or minute cycles within it. One way you can actually play this, and this is part of what is provided with the software, you can have this and then you can actually change. You can see I use the zigzag just to basically look at advances and declines. But I can take zigzag and I'll just make one quick change just to show you. I have it on 17 points, so I want to go ahead and change it to 35. Click OK, and now you see that it picks up almost the whole piece right here to the top. So the intermediate cycle was picked up and it ends right over here. So you can actually see the zigzags up and down of price movement. This is something that in time we attempt to understand, because again, as the market is fractal in nature, and this type of format can take place on hourly data, on daily data, on weekly data, and then it can go back also where you're looking at tick level charts or volume type charts. So with that, I'm going to quickly go over the indicators. And then what we will attempt to do is to spend time looking at the setup and analysis. And we're going to look at the NASDAQ. So originally, this is what I had. I actually had one single indicator, which is the histogram. The histogram is the minor cycle. Well, one interesting thing that came out of that is that if you took that value and plotted it on the price bands, it almost acted like an adaptive moving average. And so basically you could see where price was below the green line, price above, and that actually indicated strength or weakness in the price movement. As I moved to smaller and smaller cycles, in other words, originally this was traded on 60-minute bars and daily bars, because I was actually doing swing trading. I was taking positions. I was taking very basically periods of time where it might be a month, it might be 2 months, 3 months. And so that's what I was using. Now, as I went to smaller, this is like a 540 volume, I had to come up with two other indicators. The two other ones, the intermediate and major. And this is the rule. The rule says this. So let's go ahead and go over this. Here's where price actually goes below, or actually the indicator, the minor, goes below 0. However, the intermediate and major are above 0. They're not confirming a movement to the downside. The confirmation comes right at this point where minor, intermediate, and major confirm a movement to the downside. Now, we don't want to trade once the, let's say, in other words, once basically prices start moving, the risk would be too great. So what we attempt to do, and this is something in the advanced in the XP9, we attempt to pick this area right here. And by doing that, instead of entering at a later time, which we would actually enter right here, we're entering or making an assessment of entering at an earlier time. Now, if we look at the very bottom, we have a heat map. And the heat map is nothing more than a tool to help you find out what's going on with those indicators. So let's go over the first three. The first three, 1, 2, and 3, right there, they ask the question, and the question is the weakest cycle minor, above or below 0? And when it's above 0, it actually shows you a green arrow. Sorry, it turns green. When the minor, intermediate, and major are all above 0, you actually have all three of them turn green. Bullish bias on those. Now the other ones that we have there, and that's item 4, 5, and 6. 4, 5, and 6 ask this question. The question is, what is the slope of the cycle? Why? Why do we want to know that? Well, see how you have a movement right over here at 1433? Let's see what happened. Over here, let's move that up a bit. And slopes start to change. And then there was a point there at 1436, 3 minutes later, where all three slopes were in agreement as to a bearish bias. Well, so by looking at slope, we can have an earlier look or an earlier signal on a turn in the market. So let's say that this is a basic type of a system to do. Trend following, maybe not that many tools. So we go and we look at the next one is cycles. Now this one is a lot of stuff over here. So what I'm going to do is I'm going to just take some of them out. Okay, so let's do this and take some of them out. The first thing that we have is this is actually a Ranger band. What it actually does is it looks at price, but it looks in essence at the V2, the indicator right down here. And it says, well, is it overextended? And the calculation for, let's say, support 1, support 2, and support 3, resistance 1, 2, and 3 is a range of value, Ranger. Lower right-hand corner, 22. Between each of those bands, there are 22 ticks. What does Ranger do? Well, it calculates the value of a bar. At this point here trading, the average bar is 22 ticks. You see, basically we added some enhancements to help us to manage risk. Well, we add the heat map again comes back, and the heat map still, the bottom 6 is still the very same stuff that I showed you earlier. But now, since we're looking in essence at cycle force, we're not looking at internal market force. So a way of looking at that is to use the weighted average price. And the weighted average price slope, type 1, type 2, and type 3 will tell you whether it's bullish, bearish, bullish or bearish bias. That's 7, 8, and 9. 10, 11, and 12 look at the weighted average price in relationship to the cycles. And I'm going to put the cycles in here now. I'm going to take this one out. Let's basically remove that and then go in here, the indicators. And there's actually 24 indicators, by the way. So we're going to look at cycles, velocity, force. Cycles velocity force applies the original algorithm, and it looks at the weighted average price. And it draws 3 lines. Closest to price is minor, the blue one is intermediate, and the one farthest away is major. So if we go, let's go back to like 9 o'clock or so this morning. Let's look over here. So what took place, I'm going to just draw something here. What generally starts happening is that price starts moving above the gold line. In other words, the major cycle. And you can see that the minor cycle actually started moving also up by looking at the V2. So heat map using weighted average price, we'll look at slopes. And the other thing that is drawn here, the little the triangle pointing right to the right, that is the weighted average price in the bar. Now, this is not necessarily as good as looking at the point of control, but it is approximately 2 to 3% off from the actual value where the point of control would appear. The other thing is this facilitates looking back at weeks, months of data, whereas if you're looking at something that looks at internal market forces, you're basically loading tick data, and then it takes an extremely long amount of time to actually load a chart. So generally, we use charts that are 5 to 7 days in length when we're looking at internal market forces. So now the other thing that you have here, this was an enhancement that was done. Some of you may think this is like the BBs, in other words, the Bollinger Bands with the little BBs. Is this kind of the same principle? However, the thing here is that this is one standard deviation and it's trying to find the areas where the cycle, in this case we're measuring the minor cycle, is not trading within the normal trading range. The normal trading range is basically one standard deviation. It's a breakout. So we're looking for breakouts. And it will draw arrows on your screen, which actually you see right there when it breaks out. Now, I had mentioned there are 3 cycles, right? You see the word minor over here now? So I can go like this and say, I really am not that interested in looking at the minor cycle. I would prefer to look at the intermediate or major cycle. Let's see where we're at right here. Input data, parameters. So I say, okay, let's look at the intermediate cycle. And the bands, you can actually change them. 1 standard deviation, you can do half a standard deviation. It's flexible, so you can actually have, let's say, the option to make different changes. So this now is the intermediate cycle. Well, what is it telling us? Well, price is moving. The intermediate cycle is still actually above 0 with a bullish bias. We have a number of divergences. And over here we have price moving down, right? We would expect the same thing to be happening up here, but it is not. It's going sideways. So this weakness showing, what is this telling us? Really, is the question we should ask. Well, velocity. Remember the guy that has the foot on the accelerator? He's kind of letting go a little bit. But there was enough momentum that it continues to move. Like now it's just coasting, right? So price is coasting. It goes down to here. Then it decides that, hey, we're going to apply some more force. More force is applied. And now this little guy right here moves up. It doesn't break out. So even though you're seeing price movement over here to the top side, there's still quite a bit of weakness. Right now, it's actually attempting to turn down. What has taken place? Number 1, the intermediate cycle line has been touched. At this point, whenever it touches that, you really should be considering your stops. So we had taken a quick look at basically at the velocity force. But the one that is really important for some of us, I mean, I'm a day trader, so I look at the internal market forces. It is imperative that I look at that. So in internal market forces, you still have the same cycle, but this time it's leveraging point of control. And so let's go back to 9 o'clock this morning. And I am going to make a couple of changes. So let's go like this. And we actually have a hash for the point of control. Let's take the point of control and let's make it a right, triangle right. And let's actually change the color here to, okay, let's make it like this. I'll be able to see it a lot better. And let's change the size to 4. So now we see the point of control, moving all over the place right over here. Finally, there's a point of control movement. And the key thing, we want to look at the point of control rising. However, this is key to this whole thing. Whenever we see something like this, where the point of controls are not kind of moving just a wee bit, not that much, that's consolidation. So we want to look at that type of a thing. I know this is kind of a busy chart. Let's go like this. Let's move towards 9 o'clock. And let's fix this here. So now we're at 9:20. Move a little bit too much there. So market opens at 9:30, point of control over the place. Then we look and we say, you know, what's going on here? Remember that I said the first three, 1, 2, and 3, 4, 5, and 6, deal specifically with cycle. But now we're looking at point of control slopes, and we're looking also at the relationship of the point of control to those lines that you see there. So let's kind of go like this. Go back in time. And let's see what we had there earlier, about 940. Okay, so here we have basically all the cycles have been in agreement from about 939 or so. Point of control is moving up, slope, price is above the minor, the intermediate, and the major. Moves up a little bit. See the line stays green. What else took place? Well, then we have a yellow, a warning. So now we got a warning over here on that bar. What changed? Well, what actually changed is the slope of the cycle changed. So the two most important pieces, and this is because I want to let you know now about the XP9. So let's go and do this. 4, 5, and 6. 4, 5, 6, 7, 8, 9. Those parameters will help you. And that basically, it is a way for us to look at this, at a peak and a trough. Why do we want to look at a peak and a trough? Well, because we want to see reversals or we want to see continuations. If the market is bullish, what are we looking for? Well, we're looking for pullbacks. We're looking for this here. And when we're looking for, want to find a pullback, what are we looking for? We're looking to join the trend again. And you find such items like here. Now, one thing that I like to let you know is this, and we can pose the question, and the question goes like this. How do I know, or how do I find a pivot? There are 3 measures you must take. Number 1, to ascertain a pivot, you need at least 3 bars. Because the next bar can move down, and let's erase this here. And let's go like this. So let's say this was a pivot. Well, the next bar moved down. How do we confirm it? Well, 3 bars moved down. So this is the 3 ticks, or 3 bars, and it was moving to the downside. That's a negative slope. Now, if we take the top bar and compare it to the previous bar, that's a 4. If we go to the bar, that's a 5. If we go like this, it's a 6. And we go here, it's a 7. And I'll explain now what a 7 means. It means in the last 7 bars, and the current bar being the third one right here. 1, 2, the third bar right here. We have a negative slope or a positive slope. And the thing is, we have a negative slope. And it's confirmed because now we're looking at that we're making lower lows. We made lower lows in comparison to 7 bars ago. So that's actually a good measure. So let's go to cycles premium, because this is where things just start getting really very useful. Now, this is XP9. XP9 actually looked at all those items. It actually did this. It looked at all the cycles. It looked at the point of controls. It looked at the relationship to them. It looked at the point of controls versus the directional bias. It looked at a lot of stuff. And then what it did, and this is, everybody likes racing stripes, right? So we go like this and apply. And it shows us bullish or bearish bias. This is kind of busy, isn't it? So let's go ahead and turn it off. And I said, what we really want to do is we want to look at pivots, but we want to look at them from the perspective of different time frames. So I am going to put something here. Okay. This is an algorithm that was written way back when, but it was resuscitated 2 years ago in October. What it actually does, it goes back, looks at volatility, looks at a number of factors, and it says, okay, if you're going to trade the NASDAQ, it finds one standard deviation, it finds a volume bar 1, and then it says, okay, the 141 is noise. The 399 is what a normal bar would be. If you add the noise value to it, you get 540. So the volume bar is set to 540. Now, there's other numbers here. It also calculates for ticks. So you could do tick bar 1, tick bar 2, tick bar 3. So you're looking at multi-time frame 3. So multi-time frame 3, again, it has a racing stripe. It has everything the other one does. But this one, you put it on the 540 bar, right? 540 volume. And then I said, I want you to look at a 1070, a 3209, and a 5349. Hopefully that's the correct values, but let me look here. 421, okay, it's actually supposed to be 421. 421. Then the next number is 1264. And the next number is, okay, 1264 and 2107. 2107. Now this is bringing about 8 days worth of tick data. It's calculating all sorts of things. And so now it tells you that you have, okay, you don't have any bias here. This is negative signal right here. But what it can actually do, and I think this is not drawing on the oscillator itself, I can click on apply again. And now on the oscillator itself, it will actually paint the background either red, see, bearish, or if we go back to somewhere about 9 o'clock today, bullish. So using this, the first signal was about 10:07. We actually had a bullish signal at 9:41 with that, but then price had moved up. The other lines you see there, this is actually leveraging the point of control. I know we are covering a lot of stuff, and thank you for your patience. You know, it's a lot of information. That actually looks at the point of controls, looks at 360 days of point of controls over specific cycle time frames, and then it will draw you lines at which there was, in essence, a high volume node. So the point of control is a level at which the majority of price has transacted either in a bar or in a group of bars. So those are, I want to call them areas of interest, areas where price is likely to stop. So that's the whole idea about that tool. So now, there is one step beyond this. Let's go ahead and delete this here. And let's delete this here. And now let's say that we're going to actually set this one up. 540 is the volume that we need. And I'm going to change this. I'm going to put the noise level, which the noise level for the NQ is 141. And then 421 tick is the next one. And then the next one is 1264 tick. I want to leave it on this chart for now. And I will now tell it to paint the bars on the top. So now this is signal long at 10:05. If you had been with me for a while, you would actually probably remember that I used the opening range and breaks out of the opening range. And I do not take a trade until I am usually close to 10 o'clock in the morning on the NASDAQ. So my signal would have come over here. I wait for the pullback, if any, and then I will go in. So now what can I do? Well, let's say that, I don't want to look at 540 volume bars, but I still want to leverage that. And I say, I'd really like, let's go ahead and do this. I want to look at, I love minutes. I want to look at minute bars. And I really like to look at, 3 minutes, and I like to look at, it's 3 days of data. Now, here's the thing. What has just taken place? What has taken place, I am polling every 3 minutes and finding out from the volume chart, which doesn't exist, it's behind the scenes, the tick charts, 3 of them, when they're all in agreement and give me a signal for a long or a short. In other words, a bullish or bearish signal. Now, there are other things and other tools that you should have as far as confirmation for a signal. And so this allows you to even go beyond what we have with the XP9. This is actually not my trading chart. The trading chart that I use is this one right here. And I'll use the XP9 multi-time frame, the one that, and then I will draw my signals. I actually usually leave it on 540 volume, or I am known to put it on 12-second bars. I have a profile because I look at the profile, and that's important to me. When do I take a trade? Well, if I'm in the middle of a profile, I'm not about to take a trade. But if I go back to 9 o'clock in the morning, and you see that the profile is changing there, the profile is from Gomi MP, Gomi Caters. So okay, remember, I take trades about 10 o'clock in the morning. So let's go back and see what's happened. Okay, so price started moving down. Point of control was a 67.97. This weakness over here looks like there's a pivot. I don't have a green signal yet, so I'm going to just go line one by one. Okay, my price is still below the major, intermediate, and minor. It's about to hit the point of control. I would expect some type of bounce off of there. Okay, now I get a green signal right here. So the point of control, and I do teach all this in analysis. What do I have here? Here's a high volume node. There's another area of value of 6810. There's an area of chaos where anything may happen here. It's a low volume node. What am I going to do? Well, if I do this, it's very close to the goal line. Price is crossed above. I would prefer for the other lines here to cross. So I'm going to hold off maybe 2 bars. Okay, thrust bar now. Thrust bar, I still have weakness in the intermediate major cycle. They're not above 0, but they're only 2.57, which is really 10 ticks away from crossing to a positive bias. So if you take this as a trade, where should your stop be? Well, more than likely, it's up to you. If you have a signal over here, in other words, this is probably where you may be held up right here, right? If you go 1-1, or you may say, okay, if it breaks through this low volume node, I want to be out. Okay, I get another strong signal. Pull back. Okay, it's going back. The point of control is being acts as support. Let's go and do this too. Look at the point of controls, what's happening there. They make it high, they pull back, then this point of control makes a higher high. And if you, visually, you actually would know there's a higher high. We're in that area where we said there's probably little value. And we're looking, here's the level, the value area high. So now let's see. Okay, there's my T1 hit. I didn't look at this today, by the way. So now, hits that target, pulls back. Ask questions, fellas. So I'm going to add something else here, okay? Remember that I have a tool that can help me understand the levels that are important. So I'll go like this. Confluence internal market forces. Now this is 6 minutes, 360 days, it's increased. It may be okay, but I'll go ahead and apply it, and if it gives me levels in the past that are relatively good, yeah, that seems to be good. Maybe there should be a bit more. Let's go ahead and put it at default. If it gives me too many lines, I'll just pull it back. Okay, that's actually good. See the line right over here? That was the point of control, but the real resistance is up here. However, if you go back, and this is the thing, you always have to go back and look at the previous lines. There's a line right here. So let's go ahead and do this. There's one right there. And let's go ahead one more line. Hits it. I know some people like to say to the tick, but it's supposed to be close enough, plus or minus 2 ticks. And so with that, that's all the tools. You also get a bar type, which is a volume bar type. I would prefer for all this to be covered in a follow-up webinar. And I'm going to actually put this here as a message. Paste it. And you can sign up there. Let's go back to the slides. And let's switch over there. If you want to know more, join me in a follow-up webinar tomorrow at 11:15. We will go about an hour to an hour and 15 minutes maximum. And then from that, all the folks that purchased the software, we will have a week, weekly training on Mondays where we go over all this and we put it all together, because you have a lot of flexibility in the number of indicators you have. But the important piece is this. You must apply them to the correct type of trading that you're doing. So the software includes cycles, cycle velocity force, cycles market force. It also includes a subscription to the periodicity guide running through the end of September. You have support and training webinars and 5 weekly sessions on Mondays, so you can get up to speed on using the product. If we put this all together, it would add up to $1,795. You're getting a 27% discount, saving $500, so the price is $1,295. The indicators can be used in custom strategies. The answer is yes. They are written right now for the future, and that would be to be used with Bloodhound from Shark Indicators. If you go to iCinDERtrader.com/NT8 lowercase, it will show you the pricing, and you can buy from there. I think I'll leave this here, and we'll entertain questions now, and we'll switch back and forth. We have a lot of coverage to a lot of items to cover, because this is something that, like the indicator suite, you're not just buying one single indicator, you're buying 24 indicators, and it's a progression in time. And reason for even let's say creating the one that's called just cycle force is that there are customers that originally on MT7 they created indicators or they created trading systems for and basically in shark indicators, Bloodhound. And so now I'm moving to MT8. Shark indicators is not there yet, but I made sure that all those indicators could be used in the future. Plus also, even though some people will consider them legacy, they're not really legacy. They're really the beginning of the cycles. And the other ones are stronger algorithms that give you additional information, but they build upon the original thought and algorithm, which is iCinDER back from 2006. They just measure different type of things. And by measuring both cycle and cycle force and internal market forces, you have a higher probability of making a right decision. And all is trying to give you probability in your analysis, along with whatever else you may be using. You may be using CCI, you may be using indicators from other companies, but it's all to provide you the ability to leverage different type of indicators. Any other questions? JC, I guess that answers that for you. Okay, well, I would suggest, for you folks to sign up for tomorrow for the follow-up. We're going to go more into that. I did cover like the main volume chart, but really it would be a good idea if you joined me tomorrow and then look at the next step beyond the main volume chart, like how to set it up for, for analysis on 4 time frames. What other indicators do I use besides this? And I do use other indicators. Those of you that been with me for a long time know that. So here's the goal. The goal is to be able to leverage indicators, not only something that I come up with, but from other vendors, to provide you with a cohesive technical analysis solution. JC, I am available for consultation after the purchase. And generally what I do with most of the people that I bought from me is we spend about an hour one-on-one, because I need to ascertain the goals that you have. So then I can say, well, the best fit is this, because I have done many of those things. I have traded stocks, I have traded the ETFs, I have traded options, all those, and then now, I'm trading futures. But all those things can be analyzed with this. I also traded Forex, by the way. The only thing that I will tell you about Forex is the internal market forces is not a good fit. But the one that is the cycles, the velocity force, that is a good set of indicators for Forex. And feel free to send me, questions. I'm going to actually write down here support at iCinDER. And that way we can track any requests that you have and follow up, and not having your message fall, into the garbage bin. I have used my indicators in automated strategies. Those of you that have NT7, we have looked at this and we have used Bloodhound, and we have also leveraged a product from another company so that we could analyze all the charts at one time. However, the MTF3 and the MTF are not in NT7. That was something that we created specifically for NinjaTrader 8. And that was only because we didn't have Bloodhound. We couldn't leverage Bloodhound at this time. If there aren't any other questions, I'm actually going to, since we were doing Q&A, I'm going to just jump over here on how to contact me, support at iCinDER. And then I'll go back and I'll leave the last slide on the promotion here. With that, I think I'll turn it back to Ryan. And if you have any other questions, Ryan can, provide them to me here and we'll answer those too. Thanks again for all of you that stayed here this long and for supporting NinjaTrader, first of all, and for supporting me and that you had decided to attend the webinar. Thank you very much. I hope to see you tomorrow.
All right. Hey, this is Ryan hopping back on from the NinjaTrader ecosystem. I'd like to give a special thank you to Raul Jimenez of iCinDER for his great presentation today. Everyone in attendance here today will receive an on-demand recording of today's event, so please keep an eye out for that email. It should be going out tomorrow. The NinjaTrader ecosystem is pleased to sponsor our weekly vendor events as a value-added service for all of our clients. If you find value in these events, we hope that you would attend them on a regular basis. I'm posting a link into the room to our archived webinars, so you can view any of our previous webinars at the following link. And this session will also be on this page once it's made available. So we'd like to remind everybody in the room that this information provided was that of iCinDER and not that of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. And again, we appreciate the time that you spend with us. We hope you enjoy the rest of your day and hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.